Hi, my name's Jonathan Calderon, President and CEO of Pillar Financial, and this is your Midweek Blitz, where we give you 2 industry updates and give you a real estate tip. Number 1, tapering. Tapering? Yes, tapering. So very recently, you might have heard this term frequently being used on the news. Like I'm talking about CNBC, major news networks, and referring to the feds buying less bonds. Well, it's pretty boring stuff, but basically what it means is that right now they're buying 60 to 70 billion in bonds. They're going to start tapering, meaning that they're going to slowly buy less and less. So that indicates that they see that the housing market is kind of starting to cool off. According to CoreLogic's chief economist, they said while the housing market feels like it has legs that never get tired, inventory and affordability constraints are still expected to put a damper on price growth. Some early data suggests that the buyer frenzy experienced this spring is tapering. There's that word again, tapering, though many buyers still remain in the market. Nevertheless, less competition and more for sale homes suggest we may be seeing the peak of home price acceleration. So stay tuned. We're going to be studying this information very closely and analyze the data that comes in the weeks and months to come, because it's going to have a direct effect on mortgage rates, and it's also going to indicate where the housing market is headed. So stay tuned. Don't miss out on your midweek blitzes. Number 2. Rates have been flat. This whole week, actually the last 2 to 3 weeks, we've seen rates do nothing. They've been boring. There's no entertainment. There's no volatility. They're not going up. They're not going down. The 30-year, the 15-year, the FHA, the jumbos, even the ARMs. Do you remember those? The adjustable rate mortgages? The ARMs have been flat. And so right now is the time to take advantage of rates, refinance, or whether you're buying. Let's lock in right now that they're still low, because what's going to happen is something on the news, it hits the market, rates go up, and that's when we get the calls. John, let's refinance before the rates go up. John, let's lock right now that the rates are going. John, everybody that's on the fence gives us a call once they see that. So don't wait. If you're on the fence, right now is the time to lock in a low rate. Reach out to one of our loan officers and we'll take care of you. Here's your real estate tip. Take the higher rate and get the credit. So you're a buyer right now, you're in escrow right now, and you find yourself either A, struggling with the cash to close because you discovered some repairs in the property, an appraisal shortage, or whatever the case may be. Here's what you do. You use the bank's money. You take a higher rate. In some cases, you can get $4,000, $5,000, $6,000, $7,000 in credit towards your closing cost for taking a higher rate. And so you take it today to close your purchase, and then 6 months down the line, 9 months, 12 months, 18 months down the line, you refinance to drop your rate and save some money. So I've seen savvy buyers do that. These savvy buyers are taking a higher rate today, they're getting that credit, and then they're refinancing in the future to drop their rate and to drop their payment. My name's Jonathan Calderon, President and CEO of Pillar Financial, and this was your Midweek Blitz.